First and foremost, I know some of you guys like to take these discussions and upload them onto YouTube, and I have no problem with that. My only request is on this one, when I say we're in a tinfoil hat discussion, do me a favor so I don't have to remove it from your YouTube channel. Don't put that portion up. I don't want this stuff on YouTube. Okay, so if you put it up, I will take it down, and it will come down. So you're welcome to put the other stuff I put up about Twitter Spaces, about trading and psychology. I have no issue with that. You can collect ad revenue off of that. I don't care. But the tinfoil hat discussion stuff, I don't want that on YouTube. So if you would be so kind as to extend that courtesy to me, I will be on the right footing with this discussion. A little bit of housekeeping in the beginning. Tomorrow will be my last discussion, observation, study with markets, Twitter or YouTube until April 10th. I'll be observing Passover. No, I'm not a Jew, but I am a Christian, and many years while I was doing private mentorship, I worked through that holiday, and I regret it every time, so I'm not doing it anymore. So nothing's wrong, nothing's amiss. I'm just simply taking some time to be with the Lord, and that's what I'll be doing. And we'll be back at it again on the following week. Tuesday will be my first live stream. Okay, so the 11th of April. So today we had a live stream, and I mentioned earlier on Twitter that we would see a couple of those levels reached pre-New York session, and we had those deliver. And then I mentioned that the actual morning session itself would be a little bit difficult. So lower your expectations. And you've seen, obviously, how muddy the waters were. Market chopped up and down, stayed in a really, well, not a very satisfying range. But even through all that mess, if you're looking for a model that you had to be testing, not that you should have been trading today. So if you look at the chart and the things I talked about during the live stream and saying, how can you say you shouldn't be trading it? On the downside, you pretty much outline where it would go. Yeah, I do that a lot. And you're going to do that a lot too. And there's going to be times where you'll be expecting certain things to unfold in the marketplace and you won't push the button. And it's okay. There's nothing wrong with that. The week prior to what you, I guess, would call Easter, I don't like to use that term, but when there's a holiday like this, generally there's a lot of money that sits on the sidelines. So for those that are wondering why I'm not looking to do anything next week, also is I'm just not looking to take on risk. I'm not looking to do that. I don't want to promote the idea that everyone else should be looking at the markets like that, even if you don't share my same faith. Now, if you looked at what we went through today in ES, we had a lot of confluences why the market would have had a short-term high formed and potentially have the weekly range capped. And what do I mean by that? Some of you may have not understood what I said earlier, and maybe you haven't gone through the core content lessons, and maybe you haven't kept notes. Maybe you didn't hear me talk about these things in other lectures and such, but when the market has a one-sidedness, in other words, for the weekly range, if the majority of the weekly range across the daily candles has been predominantly one direction, which is pretty much what we've seen since Tuesday, generally, not always, but generally, Thursday's morning session, and this works in Forex too, so don't think that it's just something that works only on futures or index trading. But generally, the New York session, morning session specifically, will tend to create a intermediate term high or intermediate term low. And that may, in fact, become the actual opposite end of the weekly range. Not all the time, but even if it trades higher tonight and goes higher than today's intraday high, I believe the high was 4087.75. So we failed to get to 4088 today. Never printed. But if we go above it overnight tonight, it's okay because you've seen how that morning session proved to be a tradable condition. In other words, we've seen an intermediate term high intraday, and it traded down to an objective that we were able to outline. You watched me do that in the live stream. And two of the targets, the two of the discount arrays that I outlined, traded to beautifully. And I screenshot it as it was slamming into the sell side liquidity pool. And it only went one tick below that from the time I screenshot it. And then it traded right from there all the way back up into the morning range, very close to the high of the day. Now, if you look at a day like today and you're arm wrestling with how maybe you were trying to push the button, maybe you were trying to participate in the morning session move lower, and maybe that created an issue for you in terms of fear of missing out, fear of getting it wrong. Hold on one second. Usually I put on my do not disturb because people like to call me when I'm doing these things. I know the text message from someone I don't want to hear from right now, but I'm going to talk to when I'm done. Not a hater. But if you were looking at this morning and you felt bewildered, chopped up, second guessing everything, that's okay. There's nothing wrong with that. In fact, that's how you should feel. That way, you will see it again in the future, and it'll prevent, hopefully, you from doing an over leveraged trade. You don't want to be doing things in the marketplace when it's like that with high leverage, which is the reason why I mentioned lower your expectations. And I read some of the tweets in response to that live session saying that you got chopped up, saying that you're down a little bit, that you're frustrated and you don't know what's going on. Oh, you're pushing a button when I told you not to push a button. And now you're bringing emotions into it, which is exactly what I said would happen if you did that. Now, for the folks that didn't push the button, you can see how you probably have spared yourself a great deal of aggravation and frustration because you didn't go into it with casino time mentality. You're in there observing, trying to learn. The takeaway from today is, yes, even inside all that mess, if it starts to move lower, we can see where it's going to go. But the problem is you have to wait for a lot of confluences, which they materialized today, as I mentioned, with the S&P divergence and the new week opening gap that it traded up into. All the other factors that were listed in that tweet. But you're not being invited to gamble when it's like that, because it could just as easily went up there and traded above that new week opening gap. In fact, it might do that overnight tonight. What's preventing it? Nothing. ICT's not. You aren't. Your will, my will, or my expectations or want for the marketplace to deliver a specific way, that's not going to be a factor. And today, what we saw in the morning session is a classic depiction of what it's like when the market presents an opportunity for you to hook up an arm wrestling match, your will against its will. And as you can see, the market's will, it shall be done. And if you're not in alignment with it, it hands you your hinder parts, your backside, your tail feathers, if you will. And maybe you thought you saw something today. Maybe you thought you saw something that was contrary to what I was pointing out, and you found out that that wasn't a good idea either. And it's also a learning lesson for you. I talked about that in the live stream today. So I'm not convinced that today scared most of you into being more diligent about picking better market conditions. I think some of you still seen the outcome of where it traded to later in the day and down to our objectives that we had for discounts. And you thought to yourself, you know what, I don't think I'm going to be intimidated next time I see a trade like this. I'm going to go and I'm still going to push the button. If I just would have pushed the button today, I wanted to do those trades that he was talking about. And I could have went short and I could have did this and could have did that. Yeah, you could have. Absolutely could have. And you could have failed. And you could have got stopped out. And you could have got scared because it was chopping around as it was dropping. And what you're feeling and what everybody else is talking about too. Listen, even to the people that don't know what they're doing, they're all saying the same thing. Man, this market, man, this price action, man, this stuff is really upsetting me. So it's not just you, it's not me, it's everyone that's looking at price action. We all see it, we all feel it. Something seems amiss, right? Something feels just a little bit off, like something's not running like it should. And whenever you feel that, whenever you see it or experience it, and you observe it in price action, it's really important for you to, number one, acknowledge the fact that you're observing and you feel that there's something amiss. That's your first indication that your experience is now speaking to you. And then invariably, what will happen is the new students, the new traders, will quickly dismiss that as, oh, that's just me trying to be nervous or scared or second guessing myself. The only answer to that equation would be just to get in there and just push the button, go with my gut feeling. And then you find out that's not something you should have been doing either. You're not guessing, you're not trying to gamble. The market has to present something logical. So it has to be very clear. It has to be one-sided, where it cannot be, and this is what I'm taking you back to in this discussion here. It can't be sold to you in the sense that you can see a buy or a sell. Because if you can do that, that is by definition an ICT low probability condition. And yes, even in low probability conditions, I can see those things panning out just as well as you can too. But the probabilities are not going to be in your favor as if you were looking at a low resistance liquidity run. You see how it took forever to get down there? See how it was a lot of give and take, a lot of back and forth price action, even though we could see the sell side it was going to reach for, even though we could see that fair value gap just below equilibrium. Just because we can see that, and just because you may have the patience to hold through that, I don't want you to focus there. That's not the trade setups I'm trying to teach you. I'm trying to teach you how to find the really fast and loose market where it just quickly, efficiently goes to your target. It allows you to be in the market very little in terms of time. And it delivers exactly what you're looking for quickly, expediently, and near painlessly. Now, I got to be careful saying things like that because it sounds like zero risk, and that's not what I'm saying at all. It just means that when we're trading with the insights I'm trying to teach you, you're going to be looking for setups that are absolutely one-sided. And this morning, hopefully, I was successful in terms of explaining how it could have done both directions until it made that higher high and falling short of the consequent encroachment of that new week opening gap. Just fell short of it at 4087.75. And at that moment, I took you through all the indices, the NASDAQ, the Dow, and the ES. And we had the SMT divergence. We were inside that 10 o'clock hour. We were looking for it to break lower. I explained how I'd like to see the one specific swing low be taken out. And I wouldn't look at the relative equal lows as a shift in market structure because it's potentially both directions. Now that SMT divergence could have been erased quickly. Dow could have snapped up there, changed everything. Because the market was consolidating back and forth, instead of just making one pass higher, failing, and one single pass higher, and then breaking down. That's a clean market. That's price direction that's easy to spot and predict. But when it has multiple high, low, higher, low, higher, lower, low, higher, high, you're in a condition that could easily become seek and destroy. And seek and destroy many times starts off where it feels like you know what you're looking for or what it's likely to deliver to you. And it takes it from you. It's like a carrot that's just dangled in front of you. Like, here's the easy money. Come get it. Just all you gotta do is push the button. And as soon as you get in there, you regret it because it runs the other direction immediately. And that's what this morning was doing to a lot of traders. And my goal is for you to anticipate these types of movements in price so that way you don't fall victim to getting in there and trying to impose your own will or block out the two-sided or dual nature of price delivery that is available in those conditions, meaning it's easy for someone to use my concepts and justify both directions. And if that's the case, that is low probability. That means you cannot frame a low resistance liquidity run where it just runs quickly and the price action is really clean. If you go back and look at your charts, and this is what you should be doing when we're done talking this evening, you want to be looking at it and taking note of how many times each individual 1 minute candle overlapped the previous. Back and forth, back and forth, back and forth. That is a market that is struggling to trade outside of a holding pattern. All it's doing is moving just a little bit, coming right back in, moving a little bit, coming back in. And it might eventually drift to an objective that might be visible to you. We outlined it this morning, but it doesn't feel like it wants to get there in a hurry. That's another classic signature of a low resistance liquidity run. A low resistance liquidity run is what you're trying to get good at spotting, anticipating, expecting, and engaging. High resistance liquidity runs is what you're trying to observe and learn how to spot so you don't have to go in there and trade them. So you have to know what both of them are. You have to know what one is so you can hopefully avoid it, or at least at the very minimum, know not to overtrade, not to do 5 trades, 6 trades, 12 trades, break every rule because you're in drawdown. By looking at only the high probability conditions where the market is offering you a low resistance liquidity run, those moves are very forgiving. Whereas these days, like we had this morning, they're not all that forgiving. Meaning when you're wrong, it's very difficult to get yourself out of the hole that you dug yourself into. And for some of you that were pushing the button when you knew you shouldn't have done it, you saw how hard that was. Learn from that. It's okay. There's no shame in it while you're learning, but it is shame when you don't learn from this and you start doing it all over again. When you know that the conditions are indicating to you that we are in high resistance liquidity. And you're probably hearing me say that so much. You're like, when is it ever going to be low resistance liquidity runs? I know, but we're in a climate right now that is very, very hard to work with. So you have to be very diligent about what it is you're looking for. You have to be very patient, and you have to be, well, shrewd. Demand a lot in terms of what the market's offering you for a setup. Whereas when we are in low resistance liquidity run, I mean, I could just simply go in here and say, okay, well, here's where the liquidity is going to draw to, above or below the marketplace. So we already have our bias, we have our direction. That's easy. Then go in there and just pick any opposing PD array. If we're bearish, we're looking for anything to get short on. Institutional order flow, bearish order block. You think about the examples I show you. All the recorded trades, they are low resistance liquidity runs. Look how many times I'm entering on a pyramid entry and how many opportunities there are with that. How many opportunities did you see getting in today to get down to that sell side? Not many. And it was very clustered. Like it was a mess. It was like a 5-year-old took a crayon for the first time and tried to color you a picture. It was scribbled up and down, up and down, up and down, back and forth, and still ultimately getting down to where we were looking for. But the drive there, the travel getting to that destination was very long, very, very uncomfortable. And that's the difference between a high resistance liquidity run versus the trades that you see me recording where it just runs really nice. So I guess in a lot of ways, when those individuals that don't like me or want to smear me or whatever, they'll say, oh, he's cherry picking. I am cherry picking, absolutely cherry picking. They're going to take this soundbite completely out of context, but I'm cherry picking the low resistance liquidity runs. Just like I'm cherry picking those when I'm tweeting. I'm telling you where they are. So that way you can study them. But it would be unfortunate if I was trying to mentor you and only giving you the candy only, just like books and courses and things. Everybody has a way to get in. Everybody has a setup that they think works, but nobody knows how to navigate the treacherous waters, those storms out at sea where you just don't have dry land to take shelter on. You just got to ride it out. Sometimes we'll be able to see these storms coming in and we'll batten down the hatches and dial back our frequency, dial back our risk, and or simply say we're not going to do anything today because it's high resistance liquidity. That means it's going to move around, yes, but it's going to move around in a manner that we aren't really interested in. So you just observe it, tape read it, paper trade it, whatever. But the moves that we're really hunting, that pick up all the slack, that pay for all the times when you're really not trying to engage more than is necessary, that's the low resistance liquidity runs. They're the ones that run 20, 30 handles real quick, multiple entries, all giving opportunity to get on board. Even though they're moving quicker, cleaner, they offer multiple entry points until we get to that that threshold of, if you're bearish, once it gets down into the discount area, then we can't take any more entries because the likelihood of it offering it is going to be very slim. But when you're bearish and we're in the equilibrium or above portion of that price run that we're anticipating, every potential PD array is up for grabs for a short. And that's what I'm showing you when I'm doing those examples where I'm recording multiple entries, building up a larger position, 6 contracts, 3 contracts, 1 contract, or 6, 5, 4, 3, 2, 1. I'm really trying to build it up. Today was not a day that I would have been able to go in and do a pyramid entry on any of that. Now, when you hear that, it's like, well, that sounds like kryptonite to ICT. Well, it is. I told you I'm not interested in trading those. I know where my weaknesses are. I know my weakness in my concepts. I know my weakness in my ability as a trader. I know where I will fall victim to emotion. I'm obsessively compulsive. That means if I do trade in those instances, I will regret it if I do it wrong, which means I'm going to be more prone to do what? Lean on my skill, my ego to try to fix it and try to be finessing some kind of correction in it. And it may not deliver like I want it to. So I'm trying to communicate it to you that this is where I have failed. That part of trading, teaching, this is the part that you really want to pay special attention to, because this is where you're going to fail. And if you're new, you don't know that you're going to fail here. You don't know that this is going to repeat in the future, and you won't see it coming. And when it knocks you down, it may be so bad of a knockdown that you may not be able to come back from it. It may be too much for your psyche to endure. Think about this, morning. That was very exhausting, wasn't it? Sitting there together for about 2 hours or so and seeing it do pretty much nothing, just banging around inside a very small range. Do you want to spend your trading day when there's nobody telling you that this is not a good thing to do? It's better for you to just close your trade, close your charts, and go do something else. Do you want to be in that environment with next to no experience with a live account in drawdown? Think about that. That's what I want you to be thinking about today. Some of you did it. Some of you did it to yourself, not listening. And now you know what it feels like. And you gained scar tissue. And it sucks because you didn't listen. And every time you don't listen and you do something you shouldn't do, you're gaining more scar tissue. And that makes it harder and longer for you to learn this, when you could just simply just do what I'm telling you to do. No risk. Just observe. No demo trading either. Did you hear me say, take a demo here, take a demo? Nothing. Lower your expectations. Why? I'm preparing your mind to anticipate that very condition. And we saw it back and forth, back and forth. You won't likely blow your account on days that are just absolutely one-sided. I've had students that have did very, very poorly with their entries because they either waited too long, the market was too fast for their liking, and instead of getting in the fair value gap, it starts moving away from the fair value gap and they get in there. That to me is chasing price. But they will show their results to me and say, hey, look at this. This is what I did. I know I wasn't all that great with the entry, but look what I made. And I have to be honest with them and tell them, you did poorly. You're entering in a time when the market's expanding away from the PDA rate that you should be trading. I mean, if you get real close to the low of a fair value gap and you're bearish, I ain't going to cut you off for that. But if you're like the range of the fair value gap from the highest point and the lowest point, if you're like 1.5 times that range below the fair value gap and you just happen to make money, you're going to hear it from me. That's not what we do. We don't do those things. And that's what my son's trying to do. Like he doesn't trust the fair value gap because he hasn't seen it enough. And he's telling me he wants to do it his way and just give him a little bit of time. If he doesn't do well, then he'll do whatever I tell him to do. Well, I told him, just simply do what I told you to do. Why make this longer than it needs to be? Why put me through all this? Because I don't have the patience for it. I'm 50 years old and cantankerous and I'm set in my ways, and I feel like he's just being unruly. But, I understand he's 18, he's doing what he wants to do. I understand that, but you got to listen to me or it's going to be harder for you. And some of you are just the same way, just like one of my sons that don't want to listen. Good sound advice, and you don't want to listen. And he's not feeling too good about himself because he's trying to do things through ignorance, not knowing what he's doing. And he's seeing the difficulty in it. And he's chasing. He waits for it to move a little bit. Once it starts moving where he thinks it's going to go, and it's not all the time correct where he thinks it's going to go either, chases it. He's outside of a PD array. He's outside. He's waiting for the fair value gap to form, go into it, then move away from it. That's what he's trying to tell himself. That's his confirmation. That's his setup. And that is not a setup. That's chasing price. And I've seen that in my own students, whether it be in private mentorship or in the free mentorship. And it's just a matter of they haven't spent enough time studying price action, the old moves, seeing it over and over and over again. Condition yourself that way you can see it, and then watching it for in real time. Observing it through the tape reading, not pushing a button, and then thinking to yourself, okay, it's going into that fair value gap right now, and I'm bearish. It should go up to this point here. And then in your mind, you're anticipating a turn. You're not pushing a button. You're anticipating it. You're expecting it. Inside your brain, the dialogue is, okay, we're inside here. I want to see price repel from here. Reject this area and move away from it energetically in the direction I think the draw on liquidity is. His draw on liquidity is wrong. He's not sticking to the bias. He's not sticking to the expectations that I'm mapping out in the morning. Whatever I tell him to do, he's trying to find something up. That's like an arm wrestling match that's opposite to that. Now, some of you are probably smiling and listening to that thinking, damn it, I thought I was the only one. Just because he's my son doesn't make him exempt. He's having the same human characteristics that everybody has. You want to do your own way, your own thing. Don't walk on the grass. And he's trying to moonwalk on it. And he doesn't know how to moonwalk. So he's fumbling. And if it were anyone else, it would be amusing. But it's not amusing to me because, number one, I feel like he's not listening to me. And I'm giving him time to talk to him about what it is I want to see him focusing on. And it's being disregarded. If it was anything else, I'd be in his ass about it. But I'm trying to be very careful not to break his spirit, because I could very easily come down on him like an ogre and say what I want to say. If it was someone like you all, I'd be like a drill sergeant, and it would hurt his feelings. And then he would have a chip on his shoulder, and then he would be resentful to me, and then he wouldn't learn how to do it. So I'm trying not to smolder this ember I have right now. And I'm trusting that his difficulty he's bringing upon himself will get to some threshold where he says, okay, I tried it my way. Whatever you say, Dad. Remember, he's the one that's the most likely to be combative. He's the competitive one of my boys. He's the more outgoing extrovert. He's the wants to show everybody. And he's seeing, much like that analogy I've used many times, where you show a guy a magic trick and he thinks right away he can go out there and do it. And he doesn't do it. He can't do it. And he thinks that he's watched a few things, listened to me explain something, and he can just go out there and just do it like everybody else does with their demo going into live fund trading. I did 30 trades. 3 of them were right. Fuck it. I'm ready. Let's get out there and do some live trading. I ain't got time to be waiting around anymore. That's the same mentality. And I'm not sure what's going on, but he's doing it his way, and his way ain't the right way. So I guess it could be a little bit comforting for you to feel like even in the household of ICT, the boy wonder, who I know if he just gets his shit straightened out, he could do this better than me. He could. And I can see how I was when I was 20 years old, trying to do things my way when I didn't know anything. He's doing all that same stuff. And hopefully it doesn't take as long for him to snap out of it like it did for me. But I know he doesn't like that coffee shop job, and I don't like him being there either. And the longer he does all the wrong things, that pressure is going to grind on him. It's going to grind on him. And I know it'll do its work. And it'll just be a very, very large, jagged pill that he'll have to swallow and say, all right, Dad, you were right. Okay. That's not important. Now, here's what I want you to do. And it's very simple rules. It's very simple rules. The shit I'm explaining to you today in that live stream, that's essentially what I'm teaching him. Look for that. It's very easy. It's time specific. No. No, Dad. Look what it did over here on that day. I think that's my model. What? That just happened to move. That's nothing. There's nothing there. Okay, there's nothing there. All right. Well, this is my model. Everything he sees that's in hindsight that's moved, that's his model, because he doesn't want to do the model I'm giving him, which is the same crap that my oldest son gave me. Where nah, I want to do my own way. I want to go into crypto. Okay, I can't make him, right. I can't make him do it just as well as I can't make any of you listen to me. The ones that listen, they get it. The ones that don't listen, they go through a lot more hardship. And you can't do that kind of stuff through ignorance and when the market's not being cooperative like it has been for a while now. The market's gyrating, it's moving around. I understand that. But what I'm specifically aiming for setups for myself, and what I'm teaching you as my students to look for, they're not as clean and frequent as we have been seeing. All that means is we're getting ready to enter a time when it's going to get really wild. We're going to have big ranges again, a lot of movement, a lot of volatility, but you can't make that come. You can't make it come faster. You have to submit to it. And that's very difficult for someone that's new. Someone that's new, they think every day is going to be like that. And you're afraid that you're going to miss that big move day, that big trending day. And today, and many other instances in the past where I've lectured and told you that we're going to have, a low resistance liquidity run condition, lower your expectations. And then it delivers like that. That to me is like a superpower for a trader. Like you want to have that skill because that is kryptonite, because you need movement as a trader. You need to see pricing that is a little bit exaggerated. That's what you're looking for. You want to see some animation in price that provides the movement that even if you get off on a trade and it doesn't really give you the best fill, it's still okay. You can work with it. In a market environment like this morning, you have to be absolutely laser precise inside of mud and then be willing to sit and endure back and forth, back and forth, back and forth. And I've done a lot of that and it's stressful. It doesn't make a lot of sense for me to be doing that because no matter what you make in an environment like that, even if you're profitable, you feel like you ran a marathon. At the end of the day, which is only a couple hours in the morning session if you're going to be trading, it feels like you worked a 9 to 5 job plus a part-time job with no sleep. Your energy level's zapped because you've expended much more mental capital holding on to something, even though it made you a gain, if it does. You spent so much energy, so much concern about being able to stay with it and will it turn against me and how long you got to wait for it to deliver. Doesn't make any sense to me to do that. I know what I'm looking for. I'm teaching you how to look for the right ones, to zero in on those days. So tomorrow we'll be live streaming again. I'll be doing the morning session. And we'll be looking at I'm probably going to start the stream at like 9:45 because I want to see more specifically the 10 o'clock to 11 o'clock conditions. So I don't really necessarily need the opening range. So we'll start that live session tomorrow at 9:45. Give everybody a chance to show up late like you do sometimes, just like school and work. I don't see that. And then when we're done with that tomorrow, because I'm doing this Twitter space here now, that will complete my time with you all until we get to the other side of Passover. Which brings me to the discussion now, tinfoil hat discussion, or the tinfoil and yarn. So anything past this point, folks, if you would please just try not to include this on your YouTube channel. I get messaged with people thinking that I have a problem or would have a problem with you uploading the Twitter spaces. I never have an issue with that. I know you guys are uploading them, you're monetizing them, you're getting paid for doing it. I don't care. I don't want them on my channel because I use language that I really don't want on that YouTube channel. But I don't want this discussion on YouTube. So unless you want me to take all of those live streams or those Twitter spaces down on your channel, just don't put this part up, okay? I promise I won't mess with any of you that are doing other ones. Just this one, don't do it, okay?